So, you're a college student, that's just awesome. You invest a lot of time and money, you work hard to pay for a tuition, but more important, you are investing in the community because we will all be happier, we'll all be better off living in a community, in the environment with more educated people. It makes total sense to ask whether the money you pay for your school is tax deductible or not. You can't write everything off, but there are some ways you can reduce your taxable income or tax. Now, the difference between a deduction and a credit is that the credit directly affects your tax. Let's say your tax is $500, your credit is $300, your tax is reduced to $200. Whereas a deduction, it deducts your taxable income. You have $20,000 of taxable income, you have $5,000 of deduction, so it's left to $15,000. So your student loan interest is a deduction, the other two are credits. Now, there are two types of credits, refundable and non-refundable. Non-refundable means, just like the word suggests, if it's more than your tax amount, your tax liability, the difference will not be refunded to you. It may reduce your tax liability up to zero, up to not paying any tax at all, but it won't be refunded to you. Whereas refundable, again, as the name suggests, if it's more than your tax liability, the difference will be refunded to you. Now, American Opportunity Tax Credit is a refundable credit up to 40% of it. So if your credit is $500, 40% of it will be refunded, will be a refundable credit, the remaining will be a non-refundable credit. So you only qualify during your first 4 years of post-secondary education. The maximum amount of credit is $2,500. Out of which $1,000 can be refundable. Now, lifetime learning credit is a non-refundable credit. However, its duration it lasts forever. As the word suggests, it's lifetime. And the maximum amount is $2,000. That's by how much it can reduce your tax. If your tax is less than $2,000, then you can only reduce by as much as your taxes. Now, what's a qualified education expense? Eventually, your tuition, everything you pay for your classes, your units, the enrollment fees like the library, the computer lab, the enrollment to classes. Also, with books and supplies, you may be a little more careful with American Opportunity Credit. Even if the books are not directly required by school, you can deduct them. With lifetime learning credit, only if the book is a part of the class. You pay directly to the school for the book. Now, what are non-qualified education expenses? Well, the board, the room. This has nothing to do with education. It's a personal expense. Also, the insurance and the medical bills, nothing to do with education. Transportation, living expenses, so those are not. And this is how it looks on the form. It's line 68 for American Opportunity Credit, for 40% of it actually. Line 50 for the lifetime learning credit. So for student loan interest deduction, there's a worksheet you can complete. I'll show you how to. It's pretty easy. If you spend your loan on the education, you can deduct the interest for up to a certain amount. It's $2,500, and also there are income limitations. Again, you can't claim any of the credits if you're married but filing separately. If you can be claimed as a dependent on someone else's return, you cannot claim the credit. If you're an international student, unfortunately, you can't. And also, for American Opportunity Tax Credit, since it's a refundable credit, it costs money to other taxpayers. You must have a clean record. You can't be convicted in any felonies. Also, before you could directly reduce up to $4,000 of tuition expenses, take as a deduction instead of taking as a credit. Now you cannot do it anymore. So you have to take credits. If you look at line 34 on form 1040, it says reserved for future use. So let's see how it looks on the paper. So Google for the form 8863 should say education credits. Make sure it's for 2017. So the part 1 is for American Opportunity Credit, and part 2 is non-refundable credits, which is in this case lifetime learning credit. So start with entering your name and your social security number. So before you start parts 1 or 2, you actually have to complete part 3, some information. The student name, the educational institution, the address. Then did the student receive Form 1098? That's the form the schools usually give to students. If you haven't received it, ask the school. But if the school can't provide you, that's still fine. So line 21, just the social security number, nothing too difficult. Then, line 23, so you can only claim the credit for 4 years. So you're gonna mark no, because if it's yes, then you can't claim it. And then line 24, was the student enrolled for at least one academic period that began in 2017? Well, then eventually yes, otherwise you wouldn't be able to claim the credit. 25, did the student complete the 4 years? If yes, you can't claim it, so the answer is no. And then, as I said, you can't be convicted in any felonies, so the answer should be no. Now, line 27, the adjusted qualified expenses, the max you can enter is $4,000. Let's say it's $3,000 here. So we're going to subtract $2,000 on line 28. So 1,000, then multiply line 28 by 25%, so we get 250. And then we just add $2,000 to the amount on the line 29, so it's going to be $2,250. Now let's go to the part 1. So we're going to enter the total, $2,250 on the line 1. Then line 2 is just testing for some income. So let's say she's filing a single, so it's $90,000. 3 is just the adjusted gross income from line 22. So it basically compares your gross income with some thresholds. Pretty easy, just enter the information. Eventually, if number 3 is larger than the amount prompted on line 2, then you can't claim the credit. That's what the line 4 is about. And then line 5 again, some thresholds. 10,000 for single status, and then in this case on line 6 we're going to enter 1, so we're gonna take the full amount of the refundable part of the credit. Now multiply line 1 by 96, so it's pretty easy. And then the refundable part would be 2250 times 40%, so $900. And I'd like to show you how it looks on your form 1040. So we're gonna go all the way down under payments, because this is a refundable credit again. It's treated as if you paid this to the government and then government pays it back to you. So American Opportunity Credit, $900 will be refunded to you, assuming no other tax liability. There we go. Okay, now let's say if you don't qualify if you already completed 4 years of your post-secondary education, you still have an option to claim the lifetime learning credit. And now we're just gonna forget about this. So line 31. the adjusted qualified education expenses. Again, we're just going to ignore the American Opportunity Credit as if it never existed for sake of simplicity. In real life, you would add the amount, the remaining amount from of the credit. So line 10 is the total amount, $3,000. Now the smaller, again, you have a limit of $10,000, so you have to enter the smallest one. So you can't have more than $10,000 qualified education expenses for lifetime learning credit. And then you're gonna take the 20% of whatever you had. You're gonna enter $66,000 if you're filing as single. Your adjusted gross income, which was $45,000. If the difference is greater than 10, then we can take the full credit. We take the full credit. Just one. And then pretty much we're just going to multiply $600, so 20% of the qualified education expenses by 1, so we get the entire amount. $600. Now the credit limit worksheet simply means that since it's a non-refundable credit, it cannot be more than your tax liability. So it has to be less than your tax. So you can do the worksheet, it's not going to change much. So we're just going to take all the $600. And it's going to go under your refunds, under your tax credits. Education credits from 8863 line 19. Again, it cannot be more than your tax. So if your tax is only $500, you are going to take $500 only. If your tax is $700, you leave at $600. So it cannot be more, it can be less. And the last one is the student loan interest deduction worksheet. So, okay, so the interest you paid for your school, this is a worksheet, so this is not a form, so you can just write on it. You're not gonna attach this to your tax return. So let's say they paid $1,000 of interest. And then let's say the gross income. On line 2, you're gonna enter the total income from lot 1040. On line 3, you're gonna get all the adjustment, all the adjustments to your gross income. So let's say 17,450. So the difference, 45,000, the adjusted gross income. So the one we used also to in the forms, in the other form. Now, depending on your filing status, you're going to choose either $65,000 or $130,000, just to make sure you didn't make too much money. So line 6, eventually your income is less than $65,000, so